everyone. Thank you for joining us. Appreciate the time and the space and the DNA team for hosting us. I'm Fahmi Syed. I am CFO of the Midnight Project. That is a new privacy blockchain launching later this year, which gives you the ability to be both public and private in a blockchain at the same time, where you can issue RWA tokens publicly, like you do in the equity markets today, where you can hold and transact those positions privately, so you are protected from being doxxed, but also you can use that selectively disclosed to gain access to other products and leverage. I am joined by Jay Madhu from Oxbridge. So Jay, do you want to introduce yourself to the audience here?
Yes, absolutely. Good afternoon, Jay Madhu. I'm the CEO and Chairman of Oxbridge Insurance Plus. Oxbridge is a publicly traded company on the NASDAQ. Insurance Plus is a RWA company in the reinsurance space. So we raise capital, issue a tokenized security, and that underlying asset, the monies are transferred over to reinsurance contracts, and we administer reinsurance contracts. Currently, we're doing property casualty.
Thank you, Jay. And I'm joined by Jake, Managing Director and Head of Ecosystem at BitGo. Jake, do you want to tell us a little about yourself and who BitGo are?
Yeah, so I've been in the crypto space for about 12 years. Most recently, I sold my company Height Zero to BitGo, which was a wealth management and a token management offering. So now I lead ecosystems. So we onboard new coins, protocols, foundations, labs, entities, companies like Midnight, and help deliver services all through the BitGo product stack, which includes staking, custody, token management, trading, borrow, lend, OTC, etc.
Thank you. So look, I'm going to look at my phone. I've got a few questions to ask both of you, and hopefully we'll make this interactive, and the audience might find some of these things interesting. So first of all, Jay, if I start with you. As an insurance company, as a large provider of protection to a lot of your clients, what does tokenization mean in the context of traditional finance? How you think about your balance sheet, your business, and why is it becoming such a critical focus for you now?
So access to capital, every reinsurance company, it's paramount, access to capital. The business that we're involved in, we reinsure, majority of our market is the state of Florida. Florida is the 14th largest economy in the world, and in that state, hurricane insurance and now reinsurance is the biggest risk. So in an insurance company, and by the way, I have insurance background as well, because 17 years ago, we started an insurance underwriter with $10 million, took it public with another 10 million. Today, that's traded on the New York Stock Exchange. We're bringing over $1 billion in revenue, 100 million in profit. So $2.50 went to $145, right? So I speak from both sides of it. So from a reinsurance perspective, an insurance company pays out 45 cents out of every dollar it takes in to reinsurers. The reinsurer now can go out and write capital, but what we do is we write one-to-one, and the more capital we have, the more money we can put to work. But to your point, what's the basis of doing this? Is trap capital is important by tokenizing things. Not only can we raise capital, we can democratize that's access, but also on the other side, if you have trap capital, you can now lay off that risk and you can have tradability, releasing your capital so you can redeploy as you go forward.
Great, thank you. And Jay, what are you seeing at BitGo? What are your clients, partners, all looking for? What are they bringing to the equation? Why is it such a focus?
It's a focus because it's bringing new capital into a space that can really benefit from newly injected capital. And so one of the big focuses that we've been looking at is really on the base security, tokenized security standpoint. So talking about stocks and bringing that on-chain, so then you can bring that liquidity to DeFi applications, create yield opportunities, use that as collateral, and it just helps grow this financial primitive that we call crypto. And what is really interesting about what Jay is doing is this is something else that can be brought into the space that is very high yield generating asset that can also be used as collateral and really bring something entirely new. And even before this panel, I had to look up, what is reinsurance, right? And so at first I thought, what did I sign up for? What is this panel? But I started looking into it and I was like, okay, this makes a lot of sense. And it catches your attention really quickly when you see something that says 42% APY. And you're like, Jesus, all right, well, how does that happen? And then you tokenize it, and my mind starts going. Like I said, I've been in crypto a long time, so now I start thinking, okay, you can loop this tokenized security that's already earning 42%, and then you start using that as collateral on something like Deribit to trade options, and then it starts getting really, really interesting. So again, so like a lot of what BitGo and what crypto's trying to push for is taking previously passive assets and making them active. This is a big opportunity to do that, where you can take something that is passive but yield bearing and now find some way to activate that. So it's almost flipping the script, where crypto is trying to do that directly in crypto and being asked by institutions to be able to find this yield opportunity because they're holding such significant sums of BTC and other assets. This is kind of the reverse, where this is more of a TradFi product that now can be activated by decentralized finance and the crypto space.
Yeah, I mean, this is the best of both worlds. You have access to a listed insurance company backed by fiat, real products, bringing that yield, democratizing that yield, and making that accessible to everybody in this room, not just the financial institutions, not just the fixed income traders who would typically get it, and then being able to custody it with BitGo, who then open it up to the DeFi world. And so this is very interesting in terms of what we're trying to do. So Jake, if I come back to you, how are you seeing financial institutions approach this differently to Web3 native companies in terms of bringing yield on-chain? And what do they care about?
Yeah, I mean, they're just more mature in the space that's actually being built here. I think a lot of Web3 companies that are trying to attack this RWA space are taking a lot of time to figure out the inner workings. You know, you need to be acquiring these securities if you're going to be able to be minting them on chain. And then there's this whole question around like rehypothecation. How do you structure this thing to make the most amount of financial sense? And without naming names, there are a few very large RWA players in the space right now that are going at this from a very incorrect model and are missing out on a lot of revenue potential, largely because they're pretty token rich and they're trying to build platforms to build engagement. But that's not the right way to build these things up, because eventually someone down the line, whether it be BitGo or Midnight, is going to look for some type of revenue share opportunity. And so if you're not earning revenue yourself through all of these different channels, you end up being blocked from being able to have more partner participation. So I think a lot of these large financial institutions are already thinking about this. So when they come into this, it's pretty well mapped out. And the easy part is the mint burn and the actual distribution, what chain are you going to build on, etc. Like that's pretty straightforward.
Yeah.
So I'm going to go slightly off script, and on the back of that, you explain why this space is interesting to you, and Jake explained how financial institutions think about it. How do you think about bringing your token? Who are you partnering with? Why do you think? What matters to you when you choose a partner in the space to bring those assets on chain as a token?
So, being a listed company, compliance and transparency are paramount. So anybody that we partner with, we need to make sure that whatever it is that we do, they're watching out for us as well. So it's a two-way street, right? So we're a Cayman Island company. We also need to make sure that while transparency is good, you don't have a lot of that over there to where a lot of folks know what's going on. So that's why I think Midnight has a phenomenal protocol that the guys are working towards. But it's just not about issuing a security token. It's also about getting distribution, raising capital and getting distribution. And that's kind of what you guys are doing over there. And that's what you've hit on. So getting distribution and then turning this around and doing some interesting things, juicing that leverage and using things in a different way. And it's all done as a structured product with total compliance.
Okay, again, I'm going to go off script. I'm looking at all the audience in here, and thank you for turning up. Who would like 25% yield on a token backed by a listed insurance company? Is that interesting compared to a 4% yield from the Biddle Fund? Just raise your hand if it's interesting. Yep. A lot of people don't want 25%, they're happy with the 4%.
Yeah, how about 42?
40, and how about 42? Anybody interested in 42% yield? Over there, yes. Now, would you like to hold that publicly or privately? Privately, okay. So, to Jake, maybe start with Jake. Why do you think privacy matters to the next evolution of tokenizations and the blockchain?
Well, it matters for. It's a core principle of cryptocurrency already. But when we start talking about financial institutions, we start looking at all of these different regulations around data minimization, data privacy, and again, you start going cross jurisdictions, and then you need entirely different data availability depending on what jurisdiction you're working on. And so to be able to have both private and selectable privacy, it allows that to actually come to fruition and actually exist in a single place. So companies like Midnight, who are attacking this in a very unique way, allow for that selectability. And I guess I'm going to shoot that question right back at you because, this is your bread and butter here.
Yeah, so look, Midnight has been founded as a research project and backed by Charles Hoskinson Cardano. He's been in the space since Bitcoin, Ethereum. He's seen the evolution of blockchain and questioned why we haven't seen more mass adoption. Everybody here in this audience, in this room, various topics, talk about the supply, solving the supply issue. And Jay will help solve supply and bring supply back. How do we help him with the demand? And the large institutions do not want to hold $50, $100 million clips or positions on a public blockchain. And what Midnight does is give the builders, holders, the ability to be both public and private. Just like we are in our physical world, just like we are in our digital world. Bitcoin, Ethereum, all the blockchains that have come have given us this wonderful ability to be decentralized, to take out an intermediary. But in doing so, we expose ourselves forever in terms of what we've done, how we've held it, how we transact. Midnight allows you to issue tokens publicly, so it fits with compliance that BitGo and other custodians might require, but then hold it privately. But in holding it privately, you can also selectively disclose information to certain parties. Maybe your regulator, maybe your tax accountant, or maybe to other partners who may want to give you collateral on top of your position. And exposing collateral, whether it's an individual position, a diversified portfolio, allows you to enter into more trades, and you get into a virtuous circle where you get better distribution, more throughput, more custody. So the partners that we speak to, we want to engage with, see that value proposition. So, yeah.
So Fahmi, let me ask you, at the table we were talking about parametric reinsurance, right?
Yes.
So parametric reinsurance is a situation that's easy to solve. If the wind blows, and this is what happens. So talk to us about some of the wallets that would be held and you have parametric losses. How does Midnight solve that situation?
Yeah, sure, absolutely. So again, just to be clear, we're a protocol. We give people all the tools to create this public, private, selective disclosure. So if an insurance tokenization happened on parametric insurance, the issue we've all had, if we've ever made an insurance claim, whether it's a car insurance, home insurance, hurricane insurance, let's say, is the delay in getting the funds. You need the funds to fix your car, you need the funds to fix your roof. So in parametric insurance, an individual insurance firm can put a smart contract on chain where if an event hits, and Oracle says that hurricane was a category 4, the parametric insurance product could record that and instantly pay out to the client. But no insurance firm wants to expose that they are open to category 4 hurricane risk. So you want to do that privately. And equally, I may have an insurance product and I'm not an insurer with both Jay and Jay, but Jay is paying a premium, so I want to pay him quicker than I pay Jay. So again, I want to do that privately, so he's not knocking my door saying, why am I not getting it? I saw you move on-chain to this guy, why am I not getting it? So the value of privacy within a permissionless public network is critical to see mass adoption of real-world use cases like parametric insurance, something that you may have seen, something that your clients may have seen. So just coming back to the questions, we went a bit off track there, so thank you for sort of taking those questions. What are the biggest challenges you're facing in terms of how you think about tokenization? And what are the biggest challenges you're facing in terms of seeing more traditional players come into this market? Let's start with you, Jay.
Yeah, so one of the situations that we face is so while we're a Cayman Island-based company and we're a publicly traded company, anytime we put out news, we put out press releases, etc., Yahoo Finance, for example, which most people will go to and they'll take a look for any publicly traded stock, that information doesn't get out over there. So a press release that we put out, if it gets flagged, Yahoo Finance won't put out anything saying that we're attending a crypto conference, as silly as that might sound. So some of this I think needs to change, because putting information out, getting information out is critical. But then also some of the things that we face is talking about things and explaining to folks what reinsurance is. So I think panels such as this are great. Bringing in capital is important. Pushing out information is equally important.
And Jay, if I ask you that question, what are the things preventing traditional financial players coming into this market? We're seeing a lot more tokenization opportunities coming. Jay is bringing considerable opportunities. How do you attract traditional financial players, as well as the Web3 community, to participate in these opportunities?
At this point, I think it's education based, where, like what we're talking about right here with this reinsurance product and the yield, it's how is this yield being generated, and what is this actual product I'm investing in. The other piece for adoption is just like our RWAs are a very clear narrative right now in crypto, if there is one, and there is a lot of noise in the space, and we need RWAs need RWA. They need real world adoption. Like, it actually needs to start being utilized, and utilization will breed more utilization and more funds being interested and more people talking about it, and create that actual network effect. Because right now I've yet to see any of these products create sizable volume in a way that's actually attractive to pick a winner. And companies like BitGo, ultimately we have engineering bandwidth, engineering constraints. So we need to try to pick winners with anything we do. And if there's not a clear winner, we're not just going to build to anyone. And so that's a blocker for any of these other large players. That includes Coinbase, that includes companies like X, and really any other large financial institution from adopting tokenization.
Great, thank you. So in terms of, let's talk about success. What does success mean to BitGo in this space, in what you're doing, and what does success mean to you? So Jay, maybe I'll start with Jay.
Specifically for tokenization, I mean, success to me looks like having an actual product where you could come to BitGo, you could build a product composed of different equities, different crypto assets, maybe different index funds, and wrap that all into a single thing that you can enter and exit or rebalance from. I think that is a pretty fascinating part of our financial future and what we can deliver. But to get there, we're going to need to actually integrate those rails. So like that first step of success is going to be finding the right partner and the right products to deploy on BitGo. And we already have some very interesting large fintech platform partnerships in the works doing exactly this for stocks that would be available to hundreds of millions of users. It would be done through BitGo and another partner of ours. So I think that's going to be the first big step in our pathway to success.
Fantastic. And Jay, what means success for you in this space?
Success, I think, is for us, it's several different paths. So the right strategic partners, the right distribution partners, and then ultimately what we're working towards is spinning out Assurance Plus as its own publicly traded entity. So think SEC meets blockchain, and doing it in this structured way with total compliance with the right partners. I think that, to me, is huge success.
Thank you. I think it's time for us to wrap up. So I appreciate everybody joining today. If you're interested in speaking to any of us, we'll be around. BitGo, obviously a very successful, large custodian, been in the space for a while. So Jake is heading up partnerships and ecosystems there. So appreciate your time, Jake, joining us. Jay, we look forward to the tokenizations that you bring on chain, democratizing access to real yields, really interesting yields. And for everybody else, keep watching out for midnight. We are bringing privacy, public-private, and we're going to give it away for free. So listen out for it, watch out for it. If you're interested, come speak to me. But thank you to everybody at DNA for hosting us today. Thank you.